post-Super Bowl spring market still hasn't kicked off yet. I'm Tony with Clarkson Santoro, and this is our real estate update for the week of Friday, February 21st. We know that selling or buying a home can be very stressful and confusing. That's why we do these weekly videos, so you can know how the market is impacting your options as a home seller or buyer. Every week we start off by looking at how the market performed the past week. We had 29 homes on the market this week, which is 2 more than we had last week. The average asking price is $1,917,000, just a little bit less than last week's average, $1,948,000. 5 homes went pending this week, 1 more than last week, with an average asking price of those pending homes down to $1,881,000, down from the $2,176,000 of last week. And only 1 home closed this week with a closing price of $2,310,000. Only a quarter of the number of homes that closed last week at an average asking price of, or an average closing price of $2,049,000. So now that we know how the market performed this past week, we can look at the broader trends that help us determine where the market might be heading. Before we look at those trends, if you find this information helpful, you can hit the subscribe button down below so you don't miss out on future updates. And while you're at it, why don't you share it with a friend also? Everyone deserves to be in the know about their local real estate market. All right, let's take a look at those broader indicators. As I mentioned, inventory is back up a little bit. It continues to increase as we're heading into the time of year that most homeowners who've been waiting through the winter to sell are now entering the market. At 29 homes, we are still well below an average inventory for San Ramon, but the coming soon numbers have remained consistent. So if pending sales don't pick up soon, we could start to see the inventory number creep up higher to a more buyer's market territory next month. Speaking of pending sales numbers, they remain anemic as we head firmly into the time of year when we expect to see the number of sales start to really increase. The turnover rate had climbed back up to 100% at the end of last month, but it has fallen back down to just over 50% for the past couple of weeks. This has more to do with the lack of new pending sales than it is less due to a large number of homes entering the market. With these lower turnover numbers, it's no surprise to see that the average closing price over the past month has remained lower than the average asking price on those homes, with our break-even point right there. That isn't to say that no homes are selling for more than they're asking. However, only half the homes that sold in the past month did so for more than their list price. In a market like this, it is more crucial to make sure that you price your house appropriately to generate the strong interest quickly than it is otherwise in a stronger market. Even though the market remains soft this week, the average closing price has increased by almost $100,000. Considering the fact that the average asking price on all pending homes in the past 30 days is well over $2 million and our average close is under 1.9 right now, it's safe to assume that the average sales price will only continue to increase over the next month. That just emphasizes the fact that the small sales volume can have that just emphasizes the effect, I should say, that a small sample size volume can have on average numbers, making them swing higher or lower. We started this year with an average pending price at 1.7, and now it is 400,000 higher. Started off really low, and now here we are, significantly higher. The smaller the sample size, the more susceptible the averages are to make dramatic overcorrections. Speaking of overcorrections, the stock market took a significant step backwards at the end of this week after a strong start to the year. The Triple Q fund was up 4% year to date at the beginning of the week, or at the beginning of the day even, just to lose about 50% of that year-to-date growth by the end of the day. It is still up overall to the start of the year, but the setback from today could have home buyers pause as they wait to see how the stock market will continue to perform over the next couple of weeks. Interest rates came down a couple of basis points this week, and I really mean a couple, only 2. While this isn't a significant positive change, it is better than the rates increasing again. With the majority of the indicators shifting slightly in the negative direction this week, it's good to see that interest rates aren't jumping back up as well. It's now 2 weeks after the Super Bowl, which is typically when we see the market start to pick up as we move into spring. So far, that has not happened. In fact, the turnover rate heading into Super Bowl weekend was higher than it is right now. The market hasn't slowed down significantly, but it just hasn't made the jump to what we expected to be a hot early spring market yet. The next couple of weeks are going to likely make or break our spring market. Hopefully we'll see some movement relatively soon. Thanks for joining me on this weekly update. I hope it helps you understand how our market is impacting your options. Don't forget to hit the subscribe button down below and ring the notification bell so you can stay informed on how the market is shaping up this year. And if you have any questions about how you can navigate the stressful and confusing process of selling or buying a home, leave a comment down below or reach out to us directly. We're here to help guide you every step of the way. Thanks again for joining me. I'll see you next week with a new update.